Hi, Kim. Really good to see you. Today, we are talking about a smart alternative to high yield bonds. 2022 was just a tough year for investors, and a lot of us may not realize that there are strategies that a lot of the pros utilize, which are a great complement to traditional stocks and bonds. So, we're going to talk about structured notes, which have a unique source of risk and return. What is a structured note?
So a structured note, like you said, is very unique. It has a bond element to it and a derivative element to it. So what I like to tell clients is that you can look at it as more risky than bonds and less risky than equities. And the type that we use even kind of have some features akin to the fixed index annuity. So it is a very unique and albeit complex investment to utilize.
Right. So we're going to dive into them just to let people know there are three kinds of structured notes. Principal protected income notes and growth notes. Today we are going to focus on income or yield notes. What are those, Kim?
Yeah, so this is the type that we use most frequently for clients when we're using structured notes. So the type that we use are typically 1 year in term. The fact that they are a note means that they have that maturity. So again, we're using the 1 year term, generally speaking. And then they actually pay a fixed rate of interest. Now, when we have a year like this past year, when the markets are just crazy volatile, that actually bodes very well for these types of notes, which mean that they provide a much higher yield. So this past year in 2022, we saw structured notes paying interest rates upwards of 15% for
Wow.
that year. Now, with that being said, that does not come without risk. So what that means is that that yield is defined for that year time frame. And at the end of the year, you get your principal back unless an index that we're tied to drops by 30% or more. Now, obviously, this past year is a perfect example that those things do happen from time to time. The markets can be drastic, but thankfully, those type of dips are few and far between. So how we utilize these for clients then, if we're utilizing a structured note, we just don't take one massive amount of money and invest it all at one. We ladder that and generally over a 3 to 6 month time frame. And that's, been really helpful for clients over the past year that have used these.
Yeah, absolutely. So again, that was the past year. Now we're going to look a little bit forward to 2023. We know that the Fed is going to continue raising rates, which does affect the value of bonds. So Kim, as we talk about bond alternatives and these income notes, who should be considering these income structured notes?
Yes. So what I'm telling clients is, again, this past year was a very unique year in the markets. And like you said, we had both equities and bonds decline. So
Mhm.
right now, I am not suggesting that clients with those investments sell out of what they currently have and go into something like a structured note. Where I'm using these most for clients is for those people that have money sitting on the sidelines and are ready to invest, but they're not, optimistic about the stock market. Again, this can be a good play because it does give you that defined return over the next year, and it still gives you some of that downside protection.
Mhm. All right. Well, this was helpful to talk through, but again, I think that having a strategy around it and figuring out if it's right for your unique goals and situation, it's important to have that conversation. So, what's the best way to reach you with any questions?
The best way to reach out to us is just to go to our website. All of our contact information's on there, www.young-wm.com, and that's how you can get a hold of us.
All right, Kim, thank you very much.
Thank you.